I would like to share with you 3 tips that you can implement prior to getting pre-approved. In other words, these are things that you want to do anywhere from a month to 2 prior to actually going in, meeting with a loan officer to get all pre-approved for a mortgage loan. The first thing I would do is look to opt out. Now, we shared this in a previous video, and in fact, if you need us to send it again, please let us know and we'll send you out the link. And basically what it is, you click on this link, you go online, you enter in your information, and it will prevent the credit bureaus from turning around and selling your information when you have your credit pulled by a mortgage company. And this is really important because if you don't have this in place and you get your credit pulled, there will be tons of mortgage companies calling you, texting you, harassing you for a few days after you apply with a mortgage company for your pre-approval. So definitely put this in place if you can. It typically takes a week or 2 to go into effect. So that's why I'm saying do this ahead of time before actually going in and meeting with a loan officer. The second thing is look at all your credit cards, look at what your balances are in relation to your limits. Basically, you want to be at 50% or less is kind of the minimum that you want to be at with regards to your balance to limit ratio in order to have a decent credit score. And actually to have a slightly better score, you want to be at about 30%, and then to have kind of an optimal credit score, you want to be at about 10%. That is 10% balance to limit ratio. So look to get those paid down, because as I've shared with you in the past, they only report to the credit bureaus 1 time a month, credit cards that is. So when your credit card statement cuts, that's when it reports to the bureaus. That's when it says, you know, for example, you owe $300 against a $1,000 limit and you have a $25 minimum payment. That is the only time it reports to the bureau. Even if you pay it off the next day or pay it down the next day, it won't report on the bureau until it goes through that statement cycle again. So that's why it's really important to look at this ahead of time, maybe pay some of those down if you can, and put yourself in a better situation from a credit score perspective. And then the last thing I would do, the third step, would be go ahead and start gathering your W-2s, your pay stubs, your bank statements, tax returns if you're self-employed. Look to see if you've got any large deposits that might need to get explained. So those are, you know, all the things that you're going to want to kind of gather up so that when you go in and meet with the loan officer, you're set and ready to go. Maybe you've optimized your credit score a little bit, and you're going to prevent mortgage companies from harassing you after the mortgage company does pull your credit. Listen, I hope you found this information helpful. We are here to assist you in any way that we can. Please reach out. We'd love to hear from you and love to help you with your home mortgage. Thanks so much. Have a great day. We'll talk to you soon. Bye-bye.